The year is 2025, and the global trade landscape is shifting beneath our feet. No longer business as usual. The current United States administration has taken a sharp turn inwards, adopting a protectionist stance reminiscent of a bygone era. Citing national security concerns and a desire to revive American manufacturing, the U.S. has imposed hefty tariffs on a wide range of imported goods. This move signals a significant departure from decades of free trade advocacy, and it has sent shockwaves throughout the global economy. The intended goals of this new trade policy are relayed to the world as to protect American jobs, bolster domestic industries, and reduce reliance on foreign nations. The U.S. aims to level the playing field, claiming that other countries have long engaged in unfair trade practices that have disadvantaged American workers and businesses. However, the implications of this policy shift extend far beyond American shores. The world is now grappling with the consequences of a potential trade war, one that threatens to unravel the interconnected global economy painstakingly built over the past few decades. Let me pause here and declare that I am neither a political fundi nor a trained economist. I am a proud South African who loves her country and cares for her community. I'm also an avid scholar, eager for guidance on what is important and relevant to the well-being of my country. So, as I venture my humble opinion, I will delve into the impact of the mentioned new tariffs on developing economies, examining the unique challenges they face, and exploring potential strategies for adaptation and resilience. The new U.S. trade policy, implemented in April 2025, is not merely a ripple in the water. It is a tsunami crashing onto the shores of global trade. Tariffs, essentially taxes imposed on imported goods, have been slapped on a vast array of products entering the U.S. market. From electronics and machinery to textiles and agricultural produce, these tariffs have significantly increased the cost of importing goods from other countries. The immediate impact has been felt across global stock markets, with sharp declines signaling a loss of confidence in the stability of the global economy. The Dow Jones, Nasdaq, and S&P 500 have all experienced significant drops, reflecting investor anxiety over the potential for a trade war and its associated economic fallout. While the stated aim of these tariffs is to protect American industries, the reality is far more complex. The interconnected nature of the global economy means that these protectionist measures have far-reaching consequences, impacting both developed and, more so, developing nations, except for a few. The retaliatory tariffs implemented by China, a key player in global trade, further exemplify the ripple effects of these protectionist policies, setting the stage for a tit-for-tat trade war with potentially devastating consequences. The global economy thrives on interconnectedness. It is common cause that products are rarely, if ever, manufactured entirely within the borders of a single nation. Instead, they are the result of complex global supply chains, with components sourced from various countries, each specializing in a particular stage of production. The new U.S. tariffs threaten to unravel these intricate networks, disrupting the flow of goods and services that underpin the global economy. Let's consider the manufacturing of a smartphone, a ubiquitous device in the 21st century. The raw materials required for its production are likely sourced from multiple continents. The components are then manufactured in various countries, each specializing in a specific area, before being assembled in yet another location. With tariffs imposed on various stages of this supply chain, the cost of production will definitely increase significantly. This increase in production costs will obviously then be passed down the line, ultimately impacting the consumer in the form of higher prices for goods and services. Moreover, the uncertainty surrounding these tariffs makes it difficult for businesses to plan for the future, leading to hesitation in investment and potentially stifling economic growth. It is a no-brainer that the smooth functioning of global supply chains is crucial for a healthy global economy, and the resultant disruptions caused by trade wars have the potential to inflict significant damage. While the trade war, as initiated, impacts both developed and developing countries, the latter are often disproportionately affected due to their reliance on exports and their vulnerability to global economic shocks. Developing economies, many of which are still in the process of building robust and diversified economies, face unique challenges in navigating this new era of trade turbulence. One of the most immediate impacts is the undesirable pressure on their currencies. Because as investors become wary of risk in the face of a potential global recession, they tend to move their capital away from emerging markets and towards safer havens like the US dollar. This flight of capital usually leads to a depreciation of currencies in developing countries, making imports more expensive and fueling inflation. Furthermore, developing countries often rely heavily on exports of raw materials or low-value-added goods to generate foreign exchange earnings. The newly imposed tariffs will no doubt directly impact these exports, making them less competitive in the global market, potentially leading to job losses in vital sectors, such as agriculture and manufacturing. This further exacerbates our existing economic vulnerabilities and hinders our country's ability to achieve sustainable and inclusive growth. So, what could be the most practical and desirable amongst the many actions that will be taken by various stakeholders to also consider as a way forward? If I may, let's look at the following few pointers. The answer is not to retreat, but very much to reinvent ourselves and to repackage what we have to proudly offer as a country. We need to put more effort on diversifying our trade partners and doubling down on intra-Africa trade, intentionally work towards value-added manufacturing. We should stop exporting our much-valued raw materials and start exporting finished goods. Let's implement impactful strategies that protect our currencies and jealously guard against and minimize their volatility as practically as possible. We should pivot towards digital by enhancing the exporting of services, remote work, and fintech, which trades are tariff-proof currently. We need to leverage BRICS for alternative investment and trade flows whilst we are still the front-runners. We can also strengthen public-private strategies in order to build an even stronger export-oriented industrial base. Let's amplify our country's green economy investments to increase our access to new markets in the EU and Asia. These are a few pointers amongst the very many considerations that are undoubtedly part of various discussions. The future is not tariff-free, but it can certainly be strategy-proof. Until our next Flossom Vibes Wisdom Nugget, let's not settle for being the disrupted. Let us very intentionally become the disruptor.